Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I want to do the metals went down again pretty big today. I think they're going to bounce tomorrow, but that's not the purpose of this call. Um, but oil and natural gas got murdered also. Oil being down 5%, natural gas being down like 20%. But I think there was some news out, something about India and the US and Russia. And again, as a market technician, I don't really pay attention to news. News can affect a trend for a day or two, but normally they regain their footing and actually kind of catch up in the direction that they were going. So I hope that's the case this time. But I did want to reiterate my buy on the iShares Commodity Index, symbol GSG. It ran my stop today, but I'm doing this call to reiterate my buy on GSG. So let's get into it. So again, this is the weightings of this index. And the reason why I wanted these weightings is because I believe there's a handoff going from precious metals to energy. Precious metals, gold, silver, platinum, uranium, we've owned all of those. Copper, they've been industrial metals, copper. They've been on a tear the last 2 years. And I think there's a handoff going on to energy. And so this particular commodity index is 70% energy. So it was affected greatly today. And it has some precious metals, but a very small amount. So agricultural, industrial metals, livestock. So let's take a look at the long-term picture. Here's the big bear market in commodities. It's no wonder that this index, which is energy heavy, peaked when oil peaked at $140 a barrel back in 2008 and had this big downtrend. But off this low, we have a five-wave advance. And one of the tools in my toolbox that I use to find changes of trend and cycles is the Elliott wave theory, which believes that trends or cycles go in waves of five. So we got one, two, three, four, five. So that tells me for the time being, this trend has changed from one, two, three, four, five down to a small five wave up. And then we got a sideways consolidation in the form of a triangle, which is our second wave or our B wave. And now we're going to accelerate into a third wave or C wave. If it's a third wave, we definitely want to be in front of this. We won't know till we have a five-wave advance and then see what happens in this third wave. But third waves are the most powerful. They're the ones you want to get in front of. In an up market and in a down market, you want to be short them because they're the most profitable. Here's a third wave down. Here's a small third wave up. So anyway, we should be entering a good time for this index, and I want to be in front of it. Let's take a look at this triangle and the breakout. So here it is. It's a 1, 2, 3 years in the making. So it's very good size. It broke out, came back within the breakout of the, came back within the pattern, traded sideways for another 6 months in the form of a smaller symmetrical triangle, and then broke out with a vengeance. And last week had a sell off. I believe it was on Friday, and I raised my stop actually from I think it was 22.50 down here up to 25. And I said, well, I hope this isn't too tight. Well, it was too tight. And you can see we closed at 24.46. So I'm uh, uh, I'm still reiterating my buy rating. I'm taking off the stop, so there'll be no stop for the time being, and we'll go with that. So let's take a look at the daily chart, just this part here. And here was the up move, and here's what happened on Thursday with the big reversal. I'm sure a lot of this volume was on metals. And then on Friday, there wasn't much volume at all, and prices were formed a big bullish hammer, which I thought would this low would hold, and then news events or whatever happened today, it did trick that stop. But I'm going to go with this. One of the reasons is on this high that we got confirmation of that high on our relative strength index, RSI index. This measures the underlying oomph of a move, the underlying intensity. And so when you see a higher high on our RSI as we hit higher prices, that confirms that high. That says underneath the hood, there's a lot of people still buying. Um, so what normally happens is then, if we were to be able to get another high, if that happens, we'd probably end up with a lower high on our relative strength index, and that would flash a caution sign, beware, a change of trend is coming, and I'd be selling, going neutral on that. So going to maintain our bullish rating, and I'm going to just show you the point and figure chart real quick. This is the least subjective. The other charts, I draw those, and so there's biases that leak into us humans. And when we look at a point and figure chart, it's just supply and demand. Demand is when you get a row of X's going up, and supply is when you go down. But we got a bullish trend line in place. We had a recent breakout here of prior highs, and really, we had a slight pullback so far. And so I think this thing is still intact. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends, neighbors, family. Have a great evening. I hope you sold a little bit of GameStop today. It was up 8%, so I would have definitely been selling some. Anyway, have a great evening. Adios.